Fast Money. We are live at the NASDAQ market site in Times Square. All right, one more time. Bull market or BS? Let's bring in Dougie Kass.
He's on the show tonight?
Dougie, you are there. Oh, good. Good to hear your chuckle. All right. So September was a great month. Where do we go from here?
Look, I'm growing more fearful both on technical and fundamental grounds. Technically, which is less important than the fundamentals to me, but, you know, people like Grasso worship at the altar of price momentum. I think that the market is delivering a potentially toxic combination of low volume, poor breadth, and weakening financial stocks, something that Nigerian mentioned at halftime today. These are classical bearish signals. And once the momentum stops, you there, Grasso?
Yeah, poor breath sounds like you were 16 years old, Doug.
You're going to be singing the lyrics of an old Joan Baez song. Where have all the Mo players gone? Long time passing.
I hear you, but I'm going to react to the technicals, though, because I know that it's clear-cut. It's 11:31 and it's 11:50. Whichever breaks first, good for 20 handles.
Well, I'm not so sure about that. And I think that on the fundamentals, I am also, Melissa, concerned about this a great deal of confidence with regard to the QE2's implementation and the efficacy of the program. If you listen to John Hilsenrath at the Wall Street Journal or to speeches in the last 24 hours by three Fed Reserve presidents in Minneapolis, Philadelphia, and Atlanta, it's clear that the Fed is hesitant to come into the market. Guns are blazing, you know. QE1
but then why hasn't the markets?
Shock and awe, AWE.
But why haven't the markets reacted?
Shock and awe, AWW.
But why haven't the markets reacted more strongly if there is talk, all this rhetoric out there that QE2 won't be as big or as powerful as previously anticipated?
I think it's a calendar issue. It's the end of the quarter. And as I said previously, there's a great deal of momentum investing. Remember, hedge funds have de-risked. Mutual funds have no money to invest. They're fully invested. In fact, in August, I believe around $16 or $17 billion was taken out of domestic equity mutual funds. So what's left is 70 to 80% is a combination of algorithms and technical price momentum-based strategies.
Dougie, Guy, how are you? Listen, you know, for the last week, the story's been the weakness in the U.S. dollar, and everybody that comes on the network during the day talks about how that's bullish U.S. equities. And I understand in the short term how they could say that, but I got to believe in the medium to long term, that's got to be potentially catastrophic for the U.S. equity market.
Yeah, I think in the short term, the pull of the U.S. dollar lower, Guy, improves our export base, slows down our imports, so it results in a much better trade deficit. But longer term, what this does is, you know, this QE2 and a weak dollar encourages uneconomic activity like government deficit spending, and we get asset price inflation, which is unsupported by cash flows, and we get this huge inflation in commodities like we're seeing in gold that Steve talked about previously.
Hey, Dougie, it's BK. How you doing?
Hey, BK.
Hey. So, listen, you're bond short, which I agree with the fundamentals on that. But get me from point A to B. We're looking at QE2. Maybe it's not going to be day one, week one, as big as everybody expects, but we know the money's there, right?
Yeah, the money's there. But, you know, if you look at the last 36 months, individuals have liquidated $240 billion of domestic equity mutual funds. What have they done? They've purchased $635 billion of bond mutual funds. That's the biggest spread over a three-year period in history. You know what's happening short-term, BK. The bonds are staying where they are. They're inflated because the Fed is anchoring interest rates at zero. That, too, shall pass, though.
All right, Doug, we got to leave it there. Always a pleasure to speak with you. Doug Kass of Seabreeze. All right, let's move on to our next trade here. We've already talked September's top mover, so let's get to some of the under-the-radar winners this month. And, Joe, you've been watching